So you have, I mean, most of you, if not all, you have already presented your firms, but we do have one question. Maybe you can just tell in sort of a couple of seconds, what is your true claim to fame as a VC? What are you best known for in this market? And you need to use the microphone.
One of my first investments was Trustpilot, and I think that's probably the one I like the most personally. I met Peter at an event, fell in love with him, well, the case, quickly, and it has shaped me as a VC. I was very inexperienced at the time, and he was a very inexperienced CEO. We made tons of mistakes together, but we learned a lot, both of us.
Individual or firm?
You can individually, that would be great.
Well, for me, the next couple of billion-dollar exits in 5 years' time, hopefully. No, for Northzone, I think we're best known for Spotify, but we certainly have a good number of other great companies behind us. One of our early successes many years ago was Stepstone. That was probably one of the early tech billion-dollar exits out of the Nordics. That was a Norwegian deal. I don't know if any of you remember it. It was the first e-recruiting platform or portal in the world, I think.
Well, I already mentioned Universal Robots, which I was on the board for many years. It turned out for us to be a 50+ x investment, and the company continues. It's the category leader in collaborative robots and still growing in Denmark.
I think for me, my formative kind of VC investment would be Prezi, which was kind of one of our early investments in Eastern Europe. So I hope you've seen it. It's a presentation software online. And when I met Peter Ava and the other guys, it was just like when you met Trustpilot, I think very early and very kind of searching for a path forward. And I was young as a VC, and I think I helped them some, and the company's done very well.
And for us, it's more the framework. We probably have the largest network of the Global 1000, and we work with companies at the earliest stages, like I said, proof of concept through the valley of death. And we have been the top performing fund for the last 6 years, top decile performing fund for the last 15. Elite funds are measured as top quartile funds, so we've always been one of the elite of the elites. So, and a big part of that is that our companies are successful, a large proportion of them. It's not that we have any one or two that are extremely successful, which we do, but it's more that our whole portfolio is successful as a whole compared to a standard portfolio mix.
Good, thank you. So we've heard a lot already about the type of industries that you are interested in investing in and what you see in products. But sort of on a personal level, how important is the personal relationship with the founders, and what can really make you walk away from a deal just because of personal relations? You get to answer first as well.
It's amazing. So I was last, but now I get to answer first every time. That's fantastic. No, I think much has been said on team. Team to us is above 90% of the decision. And in that team, it's absolutely essential that the founder has sufficient leadership, charisma, is able to attract talent as a magnet. He can persuade customers, investors, employees to join, even though it's a rat hole in a cellar with no salary. And on top of that, you need to know that this is a guy or girl with high integrity. You need to be able to trust this person, and you need to be able to want to drink beer with that guy or girl.
Absolutely. I mean, for us, it's, I mean, that can be a deal killer. If there's no chemistry, if we don't like each other, if there's no integrity. I've said no to plenty of deals where sound business, market leader, but there were a couple of question marks on the individuals, and we didn't really click. It doesn't work. If you look at the founders that I work with, I mean, they're like friends. And I think the best way to judge that is, I would look at them and say, you know, is this a person I would hire into my team? And reversely, is this a team I would like to join? If the answer is yes to both, then we have a deal.
well, following in the same lines, you have to work together for 7+ years most likely. So and it's got to be fun going to work, and you got to spend a lot of time together. So obviously you got to see, do you want to work with these people? You should think that about us as well. So and people bullshitting you, and you sort of you get a sense that you're not really getting the right story. That's a big turn off. And I guess one final thing.
Is that common that you get the sense that people are sort of lying, or?
No, it's not common. But
it's not common, but it happens.
Of course, you all present your opportunity in the best possible light. That's your salespeople. You're selling your idea. That's of course you do. But then there's a fine line, and no, it's not often. And just one final comment, that of course we're in the sort of buying and selling business, the investing and exiting business. But I like entrepreneurs best who are actually in it to build something great. So if the pitch is too much, well, we'll do this and then we'll exit and then we'll get rich, that doesn't excite me as much as people who want to really build something great. And we'll be owners at some point, some part of that journey, but that's not the important thing.
Yeah, I think for me it's a little bit like Tim said. I think it's about, is this a team that I would join? So if I was at this stage of my career where that was like a relevant decision, would I join these guys? And when I look at all you guys, I see Christian Lund down there from Templify as a CEO that we have been fortunate to invest in, and I think he has an amazing team, and I would love to have worked with him if that was the opportunity, and that's one of the reasons why I chose to invest in him.
Please join.
So typically we're in at the again, the valley of death. I usually don't have the luxury of investing in a team. I'm usually working with the founders and help them build a team, which is an advantage at one point. So for me, just about the only founders that I won't invest in are ones that already know it all. If they already know it all, they really don't need me. If they're willing to learn, take advice, be able to work with people that we bring on board that have industry experience, have been there, done that, have the same type of vision and can work from there and learn, then we're more than happy to work with students just out of the university who have a big vision and are growing a company that we can, again, seed and then put in 10, 20, 30 million in the later rounds. And we're willing to work with them and help them on that path. But again, only if they're willing to learn. And if they're already too smart for us anyway, then they really don't need us. So that's what we're looking for.
Good. Before I continue with my questions, are there any questions from the audience to this panel? Yes?
So question. Hey, I'm Ernest from Durio. So a question sort of about working with startups across the world, and especially for you working in the US versus Europe. Do you feel there's a lot of different ways how are there big differences in how entrepreneurs describe their business? Do you have to adjust or tweak your sort of perception when you work with US entrepreneurs versus European?
Absolutely, no question about it. I have to tell the European entrepreneurs, hit your VC in the nose. Okay, the very first slide, sell it to them. Don't put these are our conservative estimates or our conservative projections. Never do that. The Europeans are really bad at the reality lagging the perception. In the US, it's the complete other way around. The perception lags the reality because they're very good at getting up and saying, hey, we're great, we're beautiful, we're wonderful, you really want to work with us, you want to marry us, and all that. And then you look behind the covers and there's not a lot there. So the Europeans really need to push their comfort zone and really be more forthright and aggressive in explaining what they have and what they're doing. And the great thing is world-class technology, no question about it. We're finding, since we've been here, more opportunities here than actually in the US. So it's exciting.
Others want to comment on that? Other questions from the audience? I received a question on whether you are interested in investing in hardware companies as well, or whether it's only software these days.
We do actually invest in hardware. I think it was mentioned that we invested in Airtime, which we did recently, and we actively look for hardware. It has to be hardware that is somehow software enabled, and where there is a scalability factor in it. Pure hardware plays are we a little bit more skeptical about.
Others want to comment on that? Yeah.
Well, we like hardware, have done so in the past, and will also do it in the future, I'm sure.
So a big area of interest for us that, again, we invest across the whole landscape, but we have certain areas that kind of aggregated just because clusters build. So oil and gas, telecom, automotive, and enabling materials and industrial applications is one area that we have, or areas that we have strong clusters. And of course, hardware, mechanical, all that drives a lot of those industries. And we love the Internet of Things because you don't have it without things. And so we love hardware.
Good. Questions from the audience? Yes?
Hi, I'm Morten from O-People. How important is experience in the field that a founder is working with the ideas? How important is it that there's experience in that specific field for you?
I can give that a go. I think it's a double-edged sword, right? Because I think it's, I could say at one point it's very important because then you know the things that can work. But on the other hand, it's very hard, we find, for these people that have a lot of domain insight to really innovate, to truly like destroy the industry they used to work in, right? Because the more you learn, the less imaginative you are and the faster you kill your ideas, right? So I think to a certain extent, there is some truth in that these young college kids can create amazing companies just because they do not take no for an answer and they do things that seasoned entrepreneurs with a lot of domain expertise would just not even try, right? Because they would have learned from all the years that the chance of success is so low, right?
Yeah, I can echo that. I mean, you need to be a little bit crazy, right? And if you're from that industry, you only see obstacles. I think what we're looking for more is we're looking for your ability to learn about that industry. So when questioned about who's acting there, the dynamics of the industry, you need to be able to kind of dig that up on your own. That's more powerful.
And as I said before, for us it's zero. But that being said, statistics tell you that 75% of all innovations come from areas that people have experience in, whether it's education or work experience. So the odds are they're going to have a background.
I agree. You don't have to have a background. I think it's important that you are around people then that you can explain who in your team or among your advisors have that knowledge. So where do you get that from?
Yeah, actually you need somebody on your team who can explain to your customer how you're going to scale from 0 to 2 million units, or how you're going to onboard all your users. That's what you're going to need.
Yes, there's a question down here.
Hi, I'm Morten from Transporteca. I had a question about traction. I guess most of you have on one of your tick boxes that there has to be some traction for that particular. Some of you have. Could you tell us briefly, how do you measure that? Is that purely net revenues? And also, what kind of level are you looking for when you find an opportunity exciting?
That's a tricky question. I can take a stab at that. Well, it depends on what business model, what industry that you're in, what type of service that you're delivering. If we take a typical SaaS type of software business, for us, it's typically when your ARR hits around the $1 million mark, so your MRR hitting 100K. And the reason is, from a valuation perspective, and the ticket that we need to deploy, your valuation simply can't support that ticket up until that certain point. But from a traction perspective, I mean, those are levels, and we hardly ever communicate those levels because we don't want you to sort us out, because we like to follow our companies or the potential companies over time to see how you're developing, to see if you're hitting your targets, how you execute, and so forth. And on the traction side, growth is always good, but it has to be scalable growth. So if we talk more sort of consumer internet, everyone will go, Facebook, CPI probably first. If you're an app, it doesn't scale. So what we're looking for is more around, have you tested other channels? Do you have that flexibility? Are you starting to gather that knowledge around how do we scale this on a broader set other than the first 10, 20,000 users?
Can I add to that? I think, as you mentioned, it's a very fluffy thing to answer, but there are two. If you look at traction as a parameter for a VC, I think what you want in the business, if in the B2B sector, what you want to use it for is to figure out, is there actually not only a perceived need, but also a real demand for this product in the market, whatever that is. And on the consumer side, you may theorize that this is something that consumers will like, but are there actually certain segments of users that will like this product? And if you look at consumers, for example, you don't need a lot of traction. You need to, let's say, growth was mentioned, and retention. So let's say an app, they download it, great, but do they disappear again immediately? Or do they actually like your product? And for us as an early stage investor, we can live with small numbers, but we do need to see indications.
Yeah, I think we always say that we like commercial proof, and what does that mean? To me, that's two separate things. One is that there's a proof of value. Does customers actually like this? Do they want to pay for it? But there's also this proof of scale. Can you actually, in a cost-effective manner, grow the business? And so it's hard to put a number on it because that depends a lot on the industry. But often you could say, yeah, you have this very low cost. There's clearly of value to some, but sometimes you can never scale it because you just have a model. So you want to, traction for us is that you can see both, yes, it's clearly valuable to someone, but also you have found an effective way to scale it. Separate issues.
Looking at it in a different way, I would say it depends on the stage of financing you're seeking. Maybe that's at least one way that I look at it. So if you're seeking seed financing, from my perspective, you don't have to have any revenue. I think the market in general, there might be a consensus around, if you're looking for Series A, like $100,000 of recurring revenue per month with a decent gross margin. So like past the $1 million mark is a Series A, and $400,000 monthly, so 5 million annualized, is a Series B type of stage. You guys can comment on that, and so it really depends on the stage of financing you're looking for.
Yeah, there's a follow-up question here.
Hi, I'm from Norsens. I was wondering, how does it differ in your view, the US sort of versus the Europe? Because when you just talk broadly seed or Series A, or everybody has a different opinion, and of course the US is a huge market and is the most influenced. So what is generally a seed stage in the US, sometimes it's actually a Series A in Europe. So how do you compare? How do you relate with that if you have an entrepreneur from overseas as opposed to Europe?
Anyone want to comment on that?
Rounds are bigger in the US.
Well,
short answer.
Yes, so seed is pre-product, pre-customer to us. That's broadly defined. We although I have companies 5 years old that don't have any real customers, but they're worth $500 million, so I take it in stride. But the key is, again, where you are in the business cycle. Because depending on what industry you're in, what's the business cycle, what is the capital requirements? When you're talking about seed, a lot of times it's to validate more than anything else. The business model, the market, the team, etc. So in that regards, that's what we usually say: seed, and then pre-seed, and then proof of concept, where again it's flip of a coin. Can we actually do this?
Sure. Yeah.
So would you say that a Series A is actually correct to identify it as a manufacturing sort of process and early sales?
So typically, all of us want a full team, a business plan, product, and customers. If you have all that put together, then a Series A is to really drive the enterprise growth and initiation into the market. The thing is that, and then you talk about the U.S., I mean, there's the Valley, and then no one else is the Valley, okay? They did $30 billion in investments last year. What you don't see is that's the tip of the iceberg. Underneath, there's so many different mentors, companies, seed investors, angels that raise those deals up to the point where they can write the big checks and do the A rounds and B rounds that move the register, and then you look and go, the average A round is 5 million. But it's in a unique environment that's driving that. The other thing about that is, that I'd like to add on top of that is, Europe doesn't have to be the Valley. If you raise your deals up to that point, the Valley will come here. All three of our initial investments in Europe, you know, we had 3 of the Valley funds call us up immediately to say, okay, what are the rounds going to look like in the future? Is there a place for us to play? As long as you're with these guys that have a brand and it can be an anchor and raise those deals to that point, the Valley will come here.
Yes, question here.
My name is Ardam, from Donkey Republic. A lot of corporates these days talk about purpose, and maybe for angels it's quite more important, relevant. You really want to bond, and it's more of a investment where you think a lot about the project and the people, but in a maybe more romantic sense than maybe you guys have to. But I also sense that there's a growing sense of every business has to sort of justify their existence with a purpose alignment in some way. And worked a little bit with the social finance scene, and I feel there's an increasing ask for that from your investors, possibly. Do you have such a thing that you're actually looking for businesses that will have a positive impact of some kind, or is that a priority for you to look into at all? Thank you.
Anybody want to comment?
Yeah, I can try. I mean, it certainly is. It certainly is. CSR is important. Right? I wouldn't call it a demand from our LPs, but it's something that people are focusing on. But from a commercial standpoint, because that's what I represent. You know, our investment team, our primary focus will be on the commercial side. That's not a bad thing to have, because that will spill over into your sales pitches, how you go to market, how you communicate with partners. That gives you that little extra that you often need to move the company forward. So I don't think from a pure CSR perspective, I don't think we're looking for green initiatives per se, but it helps if it's there from a commercial point as well.
And then I think that there are things we won't do, and then there are things that we discuss if we would do. Right, and I think there's a lot of funds that have those things, right? So we wouldn't do arms, for instance, or something like that, and we wouldn't do stuff like, that could be, that's where the primary purpose is kind of on the edge of the law, right? But then you move into these, like, will you invest in someone who's doing a betting platform, for instance, right? And it becomes a discussion, and in our group it becomes kind of an opinionated discussion where people feel that you have to ask, like, the values you want to represent, and if you want to do that, right? And so in that case, for instance, we've leaned to a no, but other people do it, and I think that's fine, but it's kind of like it's a personal decision, right?
And we think everything we invest in has social impact, but in terms of focus on that, some of our partners and associates do. You can talk to Belen. That's one area that she's strongly focused in. There are funds, and I work with a number of family offices that's their main focus. How can you extend what you're doing into either its focus is in an area that has social impact, or how can you extend that out into areas and provide social impact in underdeveloped markets. And that's one of the things we focus on as well. Can we leverage our products in a way in markets to add value from that perspective also. But even the EIF has a fund focused only on that as well, and capital that they invest in funds that have that kind of thesis in their investment.
Ulrik, you wanted to comment?
Yeah, we're asked in all our investments for the social impact, given the owner. You might think that that's obvious. And we've also done a lot of clean tech in the past, we will do in the future. We also think that the good business and the social impact goes hand in hand. It's not sort of either this or the other. And when we sometimes get pitches that, you know, people will buy our product only because it's green, I'm skeptical that won't happen. It has to go hand in hand.
Yeah, I agree 100%.
I think as another fund that has part public funding, we're quite conscious of making sure that the investments we make don't, let's say, conflict with a positive impact. On the other hand, we actually don't really have any commercial requirements from our LPs, nor from the government. But I think the only investment we've ever made where it was a requirement from somebody was in Vivino, where there was a Swedish fund invested with us, and they said no to hard alcohol sale. But that's the only one I can remember with a hard requirement, which was actually quite annoying. But so.
There's a question here as well, so I'll get to you afterwards.
Hi, Ernest from Aderio. So in the spirit of sort of post-pitch Q&A, I mean, you all pitched about how you can add value to the startups and what great experience you have. Now, within your funds, you have a portfolio of amazing people. I mean, otherwise you wouldn't have them in your fund. Do you have any strategies to help the network of the founders and the companies that you work with help each other and help each other sort of grow exponentially?
Yes, I have to run then, because this is your microphone.
It's actually something we work quite a lot to facilitate. We're not yet good enough at it, and my colleague Helle here is actually responsible for making sure that we do more of that work. It's not her fault that we don't do enough of it. That's mine. But every time we invest, we actually try to get companies together at certain events where the CEOs get to know each other and get them to try to network. And we really try to facilitate cross-networking. They pitch to each other in closed fora so they can actually discuss each other's cases as we would the case, so giving them input from other founders. And that has proven quite helpful, actually.
Yeah, we do joint events for all our portfolio companies, and we find that founders come in two camps. Some founders definitely have no time for that. We're off creating our own business, that's all we do, and we need to spend every waking hour to build our thing. That's great. Other camps are, that's important, that's networking, we can learn a lot from each other. And I think both are good ways to move forward. So as a VC investor, we think, yep, both work. There's not only one route to success.
Yeah, and for us, we do stuff not just for the founders. We look at the CXO level and say, okay, what verticals can they help each other? So marketing is a clear example. The CMOs get together, share the latest. Also, if they enter each other's countries, given that we have portfolios in so many countries, going into a new country, if you need an agency, if you need someone there, they have someone to call. And we made those connections. On top of that, we do have a community team that do facilitate more than just knowledge sharing. It's a bit more, I'll say it's a work in progress, but it's more bringing in external advisors to our community. So we do try, but as has been alluded to before, people have their business to build as well. That should be their prime focus.
There's a question down here.
Adrian from Play with the Pro. There's been a lot of talk about the personal chemistry and relation, and I totally get it from a point of working together. On the other hand, AI has been mentioned a lot. Just curious how you see innovation in that field impact your job over the next 10 years maybe. Is it going to be profoundly changed? And are we as society maybe missing out currently on important innovations or projects that are kind of in the end always where do you believe in it or not decision dependent?
So that's actually a big theme inside our group right now. what we do there, right? And if I get a chance to have some drinks, I will tell people that I want to be the last VC on earth, because I don't know if it's realistic, but I think it's least provocative to say that the machine will be able to replace what I do. I think it's hard for it because there's a lot of people inside. There's actually some startups out here today that are working on how machines can assess people better. And we have some people working in that too. I think it's a very interesting phenomenon. I think the machines can help us a lot. I think the VCs will look very differently in 10 years. The old network styled kind of... So all the people that cold call us, 1% of our investments go to people that don't get introduced. 75% goes to people that gets introduced, and 24% goes to people we reach out to. We're looking to change that so it becomes a 50-50 reach out network. But the cold call is really not effective, right? So how do we do that, right? And that's how does technology enable 5 people to cover 3,000 European startups every year, assess which ones we should reach out to, so that we can get into the best deals. That's a very interesting topic for discussion.
Business model for a new startup, maybe?
If I may add to that, Christian, one of my personal favorite inspirational sites, I didn't get around to say that in my presentation, is Singularity University. I think some of the thoughts that they've compiled on how, let's say, exponential digital revolution will change our world going forward is absolutely fascinating. And I think the question to me is not how we as VCs will be replaced within 10 years, but how the society as a whole is going to look in 10, let's say 15 years. I think we'll see a change and a speed of change that has been unparalleled ever. And if we don't get it right, we will have serious problems. If we get it right, it'll be a whole different, interesting world.
I have a slightly different take on it. I think on the investing side, so picking companies, I think that can be automated. You don't need me to do that. I think that can be more or less automated over time. But that's only one part of the equation, and that's a relatively small part of the equation. Then there's the value drivers to facilitate that company moving forward, and the founders sticking together, building a team, and becoming a big company. There's a lot more that goes into that. And do not underestimate when I stood on stage and jokingly said, we'll be your only friend. That support network that you have from your investors is quite important, because it's fairly lonely at the top for you founders. You have very few people that you can talk to for your real problems. You have other founders, they don't know the internals of your company. So who do you have? You have your investors. That's about it. So if I look to my portfolio, my personal portfolio, my founders use me for everything from personal issues to organizational to whatever it may be. And I want it to be that way, because that's a function a computer cannot fill.
And I'd like to add to that as well. So I've had the privilege of learning with C.K. Prahalad, probably one of the greatest strategists ever. And he taught me that strategy was always an economic decision, and the way you approached it was you quantify as much as you can, and then on top of that quantified layer, you put a qualitative layer that is the art. There will always be an art component that if you try to distill out of anything, that will lead you to a path that someone with a better strategy will crush you. So there will always be that. So AI, what it does is it adds a deeper layer of that quantitative mesh for you to sit on top of and do things. But you will always have that qualitative layer on top, and it'll always add value. My friends at Google, scared to death of AI. My friends at Facebook, they're embraced it fully into it. So right now I'd be betting on Facebook.
There was a question here.
Hi, I'm Robert from Nordsense. I would like to know, how do you do in situations when it's a little bit tough? So, for example, when we start a company, we choose a co-founder that we have gone through fire. So we know we can trust, and we have previous experience on going through really, really hard situations. So maybe you can share a quick story of, maybe you had a company in your portfolio which didn't reach, for example, some KPIs, and how did you go through that? Thank you.
You want to comment on bad investments?
I was gonna say, not reaching KPIs, that's not a big deal.
Let me go first. I mean, we're in pre-seed. We have tons of investments that goes wrong. The percentage is scary. But I think in any case, I'd hate to pick out individual cases. But I think, to me, it's not only how you perform as a VC when things go well, it's also how you perform when things go bad. And I think in all cases it's really very important to be honest about what you do and straightforward and communicate consistently. So when we, for example, I mean, we're not the type of guys who say, well, if you missed your deadline with 1 picosecond, well, we're off. That's not the kind of fund we are. But we do take things seriously, but we try to have a straight and consistent communication about it, so you will know if there are consequences of certain things well ahead of time. That may be an unpopular news, but it'll be given to you straight. And from personal experience, I have many founders of failed companies that I'm still in contact with and have good relationships with, and actually sent me new companies because they had, a good experience and a straight experience.
No, I can echo that. I mean, it is about transparency. Shit happens. That's the industry, right? If you take an average Series A fund in Europe, we're talking 50+% that don't make that doesn't hit the market at the end of the day, and that's okay. That's just the way it is. It is venture, but how do you quote unquote unravel a company or so I think from Northwind's point of view, which I fully subscribe to, is we try to be realistic about it. We try to let the founders lead that process, and then just be supportive, because at the end of the day, it's your company.
Yeah, Ulrik.
Well, I think before we invest, there's this negotiation phase, and of course we're sort of coming at things from different angles. But once we have invested, we own part of the business, the founders own most of the business, but we have the joint objective to make it work. Often it doesn't work, and it almost never works according to plan. But you can't say, okay, so when things are not according to plan, what do you do? Because things can go wrong in myriads of ways. So, but you're more often than not, I think you're at the same side of the table trying to fix it, because you have the common interest in fixing it.
I would just add that most people that start companies will fail, and most of the ones that succeed will be like in the second, third attempt, right? So from our perspective, it's a repeat business, and we need to maintain good relationships with people that we think will ultimately succeed, because otherwise they will not come to us, right? And it's an important part of what we do.
So yeah, again, the reason I laughed at missing KPIs is not a big deal, because the only 95% of the problems we ever have are with the teams, managing the people, putting alignment, getting everybody to work together. So a big part of that is just making sure that the people are in the right place. And the first time through, when there's mistakes or things aren't working well, we think, okay, maybe that's partly our fault and the team, that these people or this group is in the wrong place or in the wrong focus, and we try to find the right place for them. But if it happens a second time, then we're pretty direct in how we manage that.
There was a question down here.
Hey, my name is Andreas. I'm from Praise. I know that quite a few companies at some point do a CEO succession event, right? I would be interested in hearing what your preference is there, like how often, what's your track record with companies you have worked with, And I know this is maybe a hard fall, but yeah, I'd love to hear your thoughts on that.
It's now commenting on lack of people skills.
Okay, I can start. So I think one of our learnings is it's very hard to do before you are kind of in the growth phase. So if you're pre-product market fit and you need to change like serious components of the management team, sometimes it's better just to fold it up and do something different, because it's very hard to hire someone to take a company through that discovery phase. Once you're past that and it's more of a management and leadership of growth, it can be done, but it's very, very hard because someone said culture at some point, and culture is actually something we don't really talk about, but it's crazy important in these companies as they try to grow. And when you change these CEOs and other leadership positions, there are big cultural kind of disruptions that can destroy companies years after these events happen, right? So if you can avoid it, preferably, but if you have to do it, you really should try to do it after you know what the company is doing and the company knows what it's doing. That would be one look at it.
Last one to comment, yeah.
Thank you for starting, Christian. I think I completely agree. We've had several cases where we've replaced CEOs. Again, it's about being transparent about it. But I completely concur that in the early phase it's almost impossible. And once you then move into a, let's say, more standard-like company environment, it's increasingly possible, although still difficult. But I would say it has become more and more important to us to basically chuck out, even though we are very early stage investor, chuck out teams that we don't think have the right CEO as founder, at least for the early phase, because it's so difficult to recruit. We can't help with that. We can't find a real founder. It's like a marriage. It's like going out and saying, okay, you guys, marriage, please. That doesn't work.
Yes.
I would say we have sometimes done that in the sense that we've seen teams where we thought the technical team is great, but they're lacking the leadership skills and the commercial skills, and we've helped recruit as a CEO. It's a tricky thing to do. It's better if the founders can take that, but it's also doable. Universal Robots was one such case. I think changing the CEO later on is tricky. I think in the good cases where the founder teams is often replacing the founder with someone else, if where he or she basically agrees that that's the right thing to do. Founders is a key part of the culture. So kicking the founder out, which some VC firms have to do sometimes, that's hugely valuable structure, and it's rarely works. But I guess sometimes the companies go through different phases. So the founder will also agree that it's better for the company to bring someone else in.
Two comments to that one. One, I mean, there are different extremes of it, right? There's the ultra extreme of stealth hiring of a new guy, and then you just swap them out for a gal, right? Then you swap them out. That almost never happens. God forbid that happening to one of mine. But in the world, it is a realistic scenario. The more likely one is if things aren't working out and the CEO is not fitting that role, it's not great for that person either. He or she is not having a good time building that company. And if you go out for a walk with them, have dinner with them, and sit down and have an honest conversation about life, they'll admit it. And from there on, it's a fairly straightforward process. Still hard to find a replacement, but it's a straightforward process. It's something that you can manage up front as well, before you do the investments. If you feel that, okay, this is going to be a long journey, it can be a young person, it can be a first-time entrepreneur, whatever it is, pop the question. How do you feel about 5 years down the line if the company is more mature and we need other skills? How do you feel about that? Most people would probably say they're fine with it, but you dig a little bit deeper, of course, and we often do that.
And I kind of alluded to that when I was answering your question. But for me, the number one test is, has the leader lost the team? If the team respects him, They don't have to love him. It doesn't have to be a marriage. But they do build a culture from the top down. So you can bring in somebody to actually fix a culture that isn't working as well, from the other side. But the number one, again, test for me is, does the team respect the leader, and does he give them focus? Does he give them direction and guidance? If their team is having to work around him, if the team is having to accomplish things despite him, and if the team isn't fully on board backing him, then that's a clear indication that that CEO needs to be either, again, moved to a place where they can add value, or moved out of the company.
Okay, I think we have time for one final question. Sorry, this guy.
Hi, my name is Dan Storbeck. I'm from Scarpline. We work with collaboration and IoT. What is your advice, and how do you see the future of IoT?
Anybody?
My advice is invest in IoT. I think it's going to do good. I mean, that's such a broad question. It's hard to pin down on. I think it's going to, again, change the world in multiple ways. It's already doing that. Everybody who has large platforms and infrastructures that can support it are actively investing in those platforms and the plan to enable, a trillion sensor world. And the derivative of that, of course, is going to be all the data and information that you're going to be able to, or you need to be able to distill down to important value, analytics, and those will drive positive impacts all through the value chain and life cycles and business cycles for everyone. So it's just huge. It's like the internet, back in the day. Invest in it. I don't know what it's going to do, but invest in it.
I think for me it's a very diffuse term, right? I mean, so what does that mean, right? I mean, I would want to carve it up into something. So is that the foundation for IoT? Is it for IoT in a specific vertical and as such, right? And I think that there will be different answers for the different carvings you can do at different times. But in general, we're just seeing software infusing itself into everything, right? And so maybe it's like big data. I think it's very interesting. But what do you do? What are you applying it to, right?
Yes, Ulrik?
Yes, like big data, it's like AI. Yes, it's very important, but you can invest in IoT, you can invest in some killer app that makes this very, very useful for a lot of customers.
I think you have to, when I started my career many, many years ago, I worked with clean tech. This is way before, the thing died. But if you look at clean tech, it spans every vertical in the world. So does IoT. So IoT is not a vertical for me in itself. It's a horizontal layer that spans, just about everything, from automotive to your home to connected chairs, whatnot, right? Medical, et cetera, et cetera. So IoT is about, from an investing point of view, it's more about application. It's more about the business models, as has been alluded to as well. You have to be more specific. IoT itself doesn't sell itself.
I'd like to add to that, on my personal background, I started working in Siemens in the early 90s, way back. And at that time, they'd already worked for about 15 years in home automation, Bosch Siemens. And it was just right around the corner. And now we are sort of still right around the corner. And I actually do think that automation, home automation, sensors and all that stuff is really right around the corner now. And it will profoundly change our world. However, I would say that one of the tricky things, we've invested in a couple of, Airtame is one, Sensorist is another, working towards applying sensors in different areas. And the tricky thing is to find the application that allows you to develop a market while it's still early, in my opinion. Because there's so much technology chasing at the demand, which is not really there yet. Even if look at Nest, a highly publicized company, yeah, it's great. You have connected smoke sensors and the heat regulator which only applies to a certain segment of houses, and it's so narrow right now. And how many of you would actually like to retrofit your old apartment or your whole house with some of those sensors? A very small percentage. And so for that to go mass market, there's still a ways, but there's tons of interesting sort of niches where you can carve out a position for yourself and then be big when it explodes.
Thank you. I think we are about 20 minutes past time, but we were allowed to continue because it was a very interesting panel. Thank you for volunteering, or at least not running away when you were asked. So we give a big applause for the panel.